Hi everyone, hope you are well. It's Tuesday the 27th and we should be live on our X at YouTube and our Instagram channels. Let me just check the Instagram's actually working. It says it should pop up. I'm not sure that's actually going to, looks like that's connected, but we'll see in a minute, see if it's worked. Oh, log in and let's have a look. We'll see what happens there. Anyway, we had to manually start it. Yes, so it's not let me in. Anyway, we'll see. It said it was supposed to pop up, but doesn't look like it's happened. Anyway, today we've had durable goods, not as weak as expected. It's coming on monthly minus 6.3%. A lot of that is they're just reporting on the news in about an hour ago. A lot of that to do with Boeing's. Turned down in orders. So we had this obviously the big spike ahead of the tariff chatter, 7.6% last month. It was expected to inversely reverse to minus 7.6% this month. It's not quite as bad as expected. Core goods, though, are showing some weakness. They're better, but again, better than expected. They've come in at 0.21%, but it is suggesting some sort of weakness and around the uncertainty of this flip-flopping of the tariff announcement. Obviously, over the weekend, we talked about the president was talking about 50% tariffs on the EU. He sort of dialed back on that yesterday. Remember, US markets were closed yesterday for Veterans Day. Markets in the UK were closed. Europe was open and had quite a good day on the step back from the president yesterday. But obviously, if you're trying to run a business, this uncertainty is not great. But so anyway, durable goods. Remember, the goods that hang around for a long time. That's why they're called durable. So stuff like printed circuit boards, computers, all that sort of stuff sits in the durable goods orders. There was this ramp up of orders ahead of the tariff announcement. Tariffs have obviously come in since the 2nd of April. They're down, but not down as much as many were expecting. So again, they might see that as some good news in the administration. What we've got coming up in about 10 minutes is the key number that's been sustaining the US economy for as long as I can remember. Consumer confidence, how the US consumer is feeling. The sentiment numbers obviously been hammered because of the tariffs announcement and uncertainty, but consumer confidence 87.1 is expected in 10 minutes time, 86 last time. I actually put a little chart together here from this very crudely just before we came on here. This is the chart of consumer confidence going back to October 2023. You can see we were over the key 100 level for most of 2023, all of 2024. The tariff announcement has hit the consumer quite significantly, but we're still relatively elevated in historical terms. But we're down here, as I say, 88. The consumer holding remarkably well post COVID, still very buzzy, and it's feeding through. Remember, 67%, I think it is, of US economic activity is gobbled up by the free spending US consumer. They've sort of slowed down their big ticket purchases, as they call it, over in the US on cars and housing. But housing is still holding up relatively well. New cars have slumped. Second-hand car values are moving down again from having spiked very aggressively. So let's see what they look like in say 10 minutes time, and how that impacts the markets. On the markets, obviously, Bitcoin still the daddy of them all, holding new all-time highs again, 110,000 over that. I'm saying new all-time highs, down from yesterday and last week, but still over that 2025 January stock high we got to 109,000 on inauguration day. So we're holding over that area. Crypto still bid. Dollar's still under pressure. The dollar story continues to weaken. If we look at the majors, sterling 135.44 at the moment. Euro 113.60. It's the hourly chart. Look, it's got the daily chart. You can see the story is of the weaker dollar continuing. So euro, say holding up. It's had a good week last week from these lows under 112, and we've continued to move up to start the new week so far. So euro into this cluster area here, 113.50 area as we go forward. More details on that as we have a look at the shorter time frame trading range. Where are you? You're here. There we are. So hopefully everybody can see me. I say euro 113.60 at the moment. Dollar CAD 137.70. So as the euro dollar continues to decline, dollar CAD continues to decline. 137.70 at the moment. Swiss franc, remember, big old mover on that pair over the course of the year so far. 82.53 we sit at the moment. We got down here in the middle of April under 80, didn't we? 80.81. The Antipodeans 64.50 for the Kiwi, for the Aussie. Big resistance area here. For the Aussie, we were long this on Friday night, took profit yesterday. The whole position was actually closed yesterday earlier on, so struggling to get over 65.20 zone, but we didn't care. We took our profit off that table. I can't remember, it was 29 pips to come back to our first trade of after 2 weeks away, which is nice. But again, you can see it remains big to the upside, isn't it? 20 period day moving averages provide big support area. Strong day on Friday, and we'll follow through enough for us to take our profit yesterday. We're down today, but obviously big support at this 64.50 area here by the 20-day moving averages. Kiwi similarly performing 59.60, .59.60. So strong day Friday, up day yesterday. No trade on that one, but you can see it's pattern following the Aussie dollar as well. Positions we have got open at the moment, and is euro. Just before the data comes out, let's have a quick look through what we got open. Euro pound from yesterday. I was nearly closed that because it wasn't really going anywhere. This was taken again on Friday night. Caught the bottom of the market on Friday, but there we go. Went against us most of yesterday, but we're actually in profit on this one. But anyway, see how that pans out. I'm looking for that to get initially to target ones down here somewhere, isn't it? This pivot area. Oh, that was a pivot area from 2023. This 83.50 area. We're looking at 83.60 for our first target. Let's see how that pans out. But it's not a massive move, but again, we're with the trend. We're under our 20-day moving average, so some pips on that one. Better movers we've seen for the pound yen. That's hit its first target this morning. That was from last night. Hopefully, you're following all these guys. Pound yen doesn't cost you anything to follow me. I'm not making any money out of it. But where's my pound yen? Pound yen. Here we are. Last night's entry was down here, and the stop loss now has been moved up. So we were, I can't remember the actual price we got in. We got filled last night on that one. Let's have a quick look before the data comes out. It's the Discord. So if you're not on our Discord group, guys, join us. I put all the end of day trades that I take on my strategy, well, most of them, not all of the ones I personally take, but most of the ones I take here under the trading strategies and number. So that was yesterday's, that was Friday's, the long Aussie, short euro pound. We closed that completely yesterday, the Aussie up, and we were out with the money last time I reported on euro. We're in the money now, euro pound. So last night was this pound yen at 93.46. But that's where our stop loss has been dragged up now. So strong day today, rocketed through. First target this morning. If we go back to the hourly chart, you see the movement. So that's our first target was hit in early doors in European trades this morning. We continue to move up. I might drag the stop loss up a bit. Remember, this is an end of day trade, so it looks exaggerated here on the hourly trade, but that's looking pretty comfortable. We'll bring that. Let's do that now. So let's bring the stop loss up to the above our entry, so we second half of the trade can't lose I might move it up a bit higher, in fact, because it's a strong. Actually, let's move it to target 1. So we've locked in at least whatever it is we made on that this morning. I did put a little number on that. We'd made 30 pips, 31.1 pips, 62.2 was our target from a pip point of view. And so we're at least making at least 62 on that, because we've got our stop loss now at our target 1. That's our entry from last night up there. We'll see how that trails out. The other one that's in the money, that's made as money this morning, is the pound against the Swiss. So 2 correlated sterling trades looking to go long. That doesn't look as beefy, but I'll certainly move that up to entry, or here on the 4-hour chart. Actually, move it up to the 20 period moving average on the 4-hour chart, that 111.37. So the stop loss has been moved to 111.37 on the pound Swiss. Half that position was closed on the hitting of target 1. It rallied further, but it's come back down currently. So we'll see where the second half of that, how that second half of that trade pans out. And that's another one that we've banked 29 pips, I think it was 45.7 pips was the target, and we've taken half of that off. So we're in the money on that as we come to the end of the month. Remember, Friday, it's the 27th of the month. Friday marks the end of the month. So let's just go back to the calendar. We've got, say, consumer confidence, 87.1 is what's expected from an 86. So a bit of a tick up. We'll see how that comes. If this comes in positive, along with the durable goods data being a bit positive, we could see a strong move in the stock markets. We've bounced back. Remember, US was closed yesterday, although our positions the derivative markets are still open. So the move up we've had from this last move down, as the gap yesterday following the Friday's sort of weaker close on the derivative market, but the cash market has been open about 25 minutes, and it remains positive into the open. Big news this week as far as the stock markets are concerned. Let me just go back to the Nasdaq. Is obviously Nvidia reports their earnings tomorrow, so that's what everybody's focusing on. And we are up for the day on the stock markets as well in the US, as we've opened positively. Nasdaq's up here. Remember, we were long this. We closed. Actually, we lost 32 points. This is a half of the position I've still got open on it, but I'm not going to report on that because it's something else. What was I say? Yeah, Nvidia's big news for stock markets this week, as well as obviously we've got the Fed minutes tomorrow night. What the Fed going to do? It looks like they could possibly do nothing all year. But still, expectations two, possibly only one. Some economists I saw this morning talking about the Fed being trapped and unable to move. A lot of them are actually in Japan. There's a big conference being run by the Bank of Japan this week, and Kashkari was very much in wait and see mode. He was there. Williams, the chief from the New York Fed, he's got a big speech later on today as well, and Barkin, another member of the Fed, he's got an interview with Bloomberg as well today. He tends to be a bit more of a wait and see sort of character, a bit more of a centrist as well. But Williams' comments perhaps a bit more influential than Kashkari and Barkin. But you got to take them all in composite, and obviously anything Chair Powell has to say is much more significant. So let's have a look what this data is going to look like if we're going to move our markets. Guys, if there's anything you're actually looking to trade at the moment, do let me know. We'll have a look at the charts, but let's just go back as we were. Energies, oil is continuing to recover, but we'd had that big shakeout at the beginning of the month when we went under 55, went into $55 under the key $58 support area. We saw some significant buy in the beginning of the month, right to 64 zone, 61. We couldn't hold that really. We come back to 61.30, and that's where we sit at the moment, 61.30, right on that first fib level of the big down leg we saw at April into the middle of April, and then also the end of May was also tested that, so that leg's still in place. Oil remains relatively weak. We got obviously into the driving season in the US as well. Majors we had a quick look at, indices we had a look at, and let's have a look at everyone's favorite, gold. Gold has come back somewhat, 3,288. We'd been moving down into this 3,200 area once I was away. Rallied somewhat, but we've got a down day today currently. So we've moved into the 3,350 area on Friday, and again yesterday we tested it, but we're moving down so far today. So on an intraday basis, gold has been trending quite nicely during the European session into the US Open, as we breached the 3,300 level was the key story this morning on the European Open, and it continued to move down so far today as well. So gold 3,289 at the moment, trending lower today, and again that would have been a first indicator of weakness this morning. And then that breach of the 3,300 level on the European Open, and we continue to trade under that. But as you can see, we've found a bit of support around about the 3,290 zone. We're just under that in the moment, but that's so far we don't want to move much below that so far today. So, but gold is weaker today. So let's go back to the euro, see what how we react to this. Data that's just about to sell. So 113.49 here. Let's go back to the 5-minute time frame. So data must have just come out yet, and the dollar's picked up a tad. So let me just have a quick look at this. Update the calendar. Let's bring in. What's that gonna look like? Consumer confidence comes in at 98, so significantly better than expected versus 87 estimate. That's a very interesting caveat. So prior month was 86, goes to 98 in May, up from 86 in April. Present situation 125.9 from 133. That's the present, the current, how people feel at the moment. Expectations 72.8 from 54.4. That's a significant driver. Significant rise in expectations suggests lower growing consumer optimism, potentially driven by easing concerns over the tariffs or the economic policies. Interesting, very, very interesting situation. The decline in the present situation index some caution regarding current economic conditions, possibly due to mixed signals in employment or business. So the flip-flopping around the tariffs doesn't seem to have impacted the consumer. That is quite a remarkable number. That should lift, confident or the dollar quite somewhat, to be honest, on there. Let's just update that calendar. You see the calendar yourself for today, Tuesday. Consumer price 98, so very significant beat, and I'm comfortable to say that. Interesting, last month was revised down 0.3 of 1 point, so that's quite a significant beat to the upside. In all honesty, 89.0. The Consumer Board Consumer Confidence, yes, it's a very, very wide survey, and it's probably the most valid of all the sentiment indexes, but obviously it is a sentiment index, so it can swing around a bit. But if you just go back to where we were with our little spreadsheet a minute ago, here, the one I'd done running into today. So this is the 100 level here, this line here, guys. So that's quite a turnaround. It's obviously only 1 month. The trend has obviously remained very solidly down over the last 3 or 4 or 5 readings, but that's quite a turnaround, taking us back to the 98 level. So interesting that the way of the tariffs perhaps not hitting those, particularly those that are in employment, because the earnings numbers have been, the wages earnings numbers have been relatively strong as well. So those that are employed perhaps feeling a bit stronger after the machinations of the early part of the year. So yeah, again, I'm sure the president will take a lot from that. That should, as I say, should improve the dollar situation. Moves perhaps as much as one might have expected on that data. So euro dollar went as low as 113.45, and we're back to 113.52. So we're back over the key 113.50 zone for the euro. Elsewhere, gold has been moving down all day, and again that moved lower to 32.85, although now it's back to 32.90, as we saw in the higher time frames, the hourly time frames. The breach of 3,300 has been maintained for most of the day, and the last half an hour we've been under 3,300, so we're moving down. But we plotted the low for the day, 3,285, and then bought that back by $5 at 3,291. But the trend remained, very much the downside. We just click this up to the 15-minute time frame. You see there, the trend lower up, new low on the consumer confidence number. So pressure to the downside remains for the gold market today. It's interesting to see how the stock markets have reacted to that little surprise uptick, or significant surprise uptick in the consumer confidence. So there's what's this 15-minute chart? It's got the 5-minute instant reaction. I mean, it's not, although it's a 3 bull measure, it's not. So there's the rally into at open. This is the opening 5 minutes. Remember, the stock market's open here at 14:30. Closed yesterday. So strong first half hour. And there's the 3 o'clock candle when the data came out. So from a trend lower all day here for 5-minute traders of the S&P 500, it's now triggering long. That would have gone long there at 588.137, having been nicely short for most of the morning as well. So again, if you're trading that one, but there's a clear resistance there from yesterday and this morning at 5,897 or 5,898 for the sake of round numbers. That would be the upside target today. First target is to get through where we are now. Basically, you see that's been a support area. It didn't mark as a resistance area yesterday. Sorry, it's not yesterday, it's this morning, isn't it? 28th, but it's been a bit of a support area here at 12 o'clock and again at 1 o'clock. So get through here. Next upside target is 3888. All the 8s, 388 is upside target for the S&P 500 in the short term basis on the back of that much better than expected consumer confidence number out of the consumer board. So if I just update, that doesn't actually show me either. Sorry, I've got a different calendar on here. Let's just update the Forex Factory calendar at 98. No, there isn't. I thought there might have been a calendar there, but that is yeah, much better than expected. Some of the wires are calling it a partial rebound, as we saw on that calendar. That's quite hard. I'd be happy to call that more than a partial rebound. Remember that this is just a simple plot of the previous data, but we're back up here. That's quite a significant rebound, I argue. Obviously, the psychological 100 level is yet to be taken out, but 98 from what had been a decline well under the 80s and 85, 70. Interestingly, again, is going to obviously mark the low point of this trend. So the anticipation of the tariffs might have been shaken off by the consumer, but the actual impact of their spending and their consumption will be key when we get Friday's PCE data as well. So not a lot expected from the Fed tomorrow. What can they say in this current climate? Obviously, claims on Thursday, weekly claims continue to be holding up. We start to see some break in the weekly claims. Let's put those back up. Who knows? But it's again, they've remained remarkably strong. So I'm talking through the calendar. Right? So lots of Fed speakers. We said today. I said top of the shop is Mr. Williams later from New York. So tomorrow we got German unemployment numbers. And then the top of the shop tomorrow will be live for that as well. The FOMC minutes. So I'm saying we're not expecting much out of that. But again, it's always interesting to see what's actually documented, what's actually written down by these major players, major market participants, what they agree at their discussions. Thursday, I say the main news is the claims. Really, I'd say the jobless claims above the GDP because GDP is backward looking. But again, that obviously adds to the spice of the day on Thursday as well. So, but really, Friday is the key. I would argue key day this week. If you scroll forward, Friday being the key day. Where we've got, because I've got all these other countries on there. The Fed's preferred measure of inflation, the core PCE index, is there on Friday. We've also got trade data and some inflation data out of Germany as well. But Friday, obviously, the other key thing with Friday is we have the ending the rounding up of May as well. So the 5th month of 2025 come to an end. Trading day will certainly come to an end. Month will come to an end on Friday as well. So lots going on Friday. GDP out of Canada as well on Friday as well. So yeah, lots to get our teeth into this week. I say that that move by the conference board is lifting stocks. It's lifting the dollar. You can see stocks moving up high here. The S&P, Nasdaq similarly rally and moving to new highs for the day. I think that new day highs 21,300 has been breached here on the Nasdaq, and the Dow 42,000 has been recovered as well in the last few minutes as well. So moved down ahead of the data, but it's still looking weak here on this 5-minute time frame. But if we look at take this up to the hourly time frame, we're moving up on the cash session. Our high today, 42,200 level, is our upside target for the Dow. Today we've bounced off the low 41,900 zone. So let's see if we can hold 42,000 round number for the Dow as we move forward. Across the Atlantic, this is the FTSE in the UK. 88 this morning. We went to 88 over 8,800. So 88.28 was our high this morning. I would come back down, but under the 8,800 level was a bit of a stretch too far, but we're still holding the 20-hour moving average here on an intraday basis. And the DAX continues to outperform. 24,265 new all-time highs for the DAX here on the reversal of the panic about EU tariffs being at 50% from the president. 24,263, say new all-time highs for the DAX, and we continue to push higher. There, massive volatility here on Friday, but continuing to move to the upside. Lots of new money moving into German stocks as the political situation calms down. This fiscal spending continues to be supported, and the worry over tariffs is obviously still there. It would make a massive hit if anything like that came in. But remember, the UK got a 10% deal, but they were very much in balance with the US goods traded. But as you can see here, on my fib chart here for the DAX, the extended fib level at 1.618 sits at 26,300 area. So that's is our upside target for the DAX. If you were trading this, keep your stop loss. Well, you might have trailing up here, but good day today for the DAX. Let's just finish with gold and Bitcoin, see where we are in response to the data. So 213, so we're back to $3, just shy $3 of the 3,300 level now. So we're up. Again, if we go back to the 5-minute chart, see how that's reacted compared to others. Yeah, positive to the consumer confidence. Interesting, having plumped this new low, so moving higher as well. But that 3,300 still seems to be an upside resistance area today here on the for you short term. Gold trade is very much a sideways action here on the 5-minute chart, so providing a floor here around about the 3,300 level. So is this going to break to the downside or to the upside? Technically, it's very difficult to tell. That RSI is not telling us anything. Here on the short-term basis, we've had the rally up here from the from lunchtime's low, tested made new daily lows on the data. So still sort of flat, nothing there from a trading point of view for me on gold on the short-term basis. The higher time frames remain short. I'd still be looking to take this short unless there's a break of the 3,300 level round about on the hourly or the 30-minute time frame, and it holds it so far. Today we've been under 3,300 all the European session and the US session so far as well. There's the 8 o'clock candle, big move down in the Asian session. Consolidated lows. There's that low to the 3288. Sorry, 3288 level, and a significant break of 3,300 is needed for this to move up today. Bias is still to the downside for gold. And finally, Bitcoin probably not moved significantly on the consumer confidence data. Where's Bitcoin here? It's 110. 107, 200. So yeah, again, another one. It's had a better day today, and it's had a better European session, back over its 20-hour moving average and moving up. So again, you know, are we going to go back to test the 111 area, this zone from earlier late last week on Friday? So Bitcoin also bid today. So I'll leave you with the calendar of a surprise tick up in consumer confidence. Remember, durable goods earlier in the day was also better than expected. Where's it gone? There it is, 98 from 85.7 last time. 87 was expected, so it's only a sentiment number, but it's better than expected. The hard durable goods were better than, not as bad as expected, but the concern would be the core number, although again quite significantly better than expected. So still very weak, or weaker expectations. The consumer is still quite bullish. So see what the claims are like on Thursday. As I say, minutes tomorrow, and then the key PCE on Friday. So that's the key data of the week, and it also rounds up the month. So take care, everyone. Thanks for being here, and we'll see you all again tomorrow for the Fed's minutes later tomorrow. So take care, everyone. All the best.